Imagine you're standing at the edge of the rushing rapids. On the other side, a valley full of the best building wood in the world. To get there, you have to swim. But here's the catch. The faster the water, the bigger the reward. If you stay in the shallow pond, you're safe, but your dam will never grow. Today, we're learning the most important rule in the forest, the risk versus reward river. Hey there, forest friends. I'm Beaver. Welcome to the meadow. Now, every beaver wants to build a magnificent dam, what we call wealth. But to get the logs, those are our assets, we have to make choices. Every day I see my friends struggling with a big question. How much risk should I take? See, Squirrel over there is too scared to leave his tree. And Bear? Well, Bear is trying to fly over the waterfall because he heard there's a golden log at the bottom. Neither of them quite has it right. Today, Owl is going to help us understand how to cross the river without getting swept away. Hoo-hoo! Hello, Beaver. To understand investing, you must understand the safety scale. Is that like a fish scale? Not quite. Think of your money like your energy. If you keep all your logs in a tiny, still pond like a savings account, they won't float away. They are very safe. That is low risk. But in a still pond, the logs don't move. They don't grow. In fact, the pond bugs, let's call them inflation bugs, might even nibble them away until they're smaller than when you started. So safe isn't always good? Exactly. To grow a forest, you need to venture into the river of investing. The river has different currents. The gentle stream, bonds or GICs, it moves slowly. You'll likely get where you're going, but it'll take a long time. The main current, index funds or the whole forest. It's faster, has some bumps, but it's the most reliable way to travel long distances. The whitewater rapids, individual stocks or crypto. This is where the big logs are, but one wrong move and splash, you've lost your fur. Rabbit. Beaver, Owl, I want a giant dam by next Tuesday. Bear told me if I jump into the volcano crater stream, I'll double my logs overnight. Whoa, slow down, Rabbit. That's not a stream, that's a lava flow. Owl. Rabbit is falling for the high reward trap. In the forest, everyone wants the biggest trees, but usually the trees with the most fruit are at the top of the steepest cliffs. Rabbit. But I want it now. Moose. Patience, little one. I've been walking this forest for 20 years. I don't jump cliffs. I walk the steady paths. My dam is huge because I didn't let the market storms wash me away. I take calculated risk. Beaver. Exactly. Moose knows that risk and reward are like a seesaw. If you want a high reward, you must accept that you might fall off the seesaw. Now, let's talk about what happens when things go wrong. In the market world, we call this a market crash. In our forest, it's a forest storm. When the storm hits, the value of your trees might look like they're shrinking. If you're in the whitewater rapids like Bear, you might lose 50% of your logs in one day. If you're with Moose in the main current, you'll get wet and your logs might dip, but the current eventually smooths out. Beaver. But here's the secret most animals miss. What if I told you there's a way to swim the river without drowning, even if you're a beginner like Rabbit? It involves a special trick Owl told me called the life jacket strategy. Stick around because if you don't use this, the first storm will be your last. Owl. The life jacket is two things, diversification and time. Beaver. Explain it simply, Owl. 1. Don't hold one log. If you hold one individual tree, a single stalk, and it rots, you sink. If you hold a bundle of many different species of trees and index fund, even if one rots, the others keep you afloat. 2. Check the weather. Risk tolerance. If you're a young beaver, you have time to dry your fur if you fall in. You can take more risk. If you're an older beaver about to retire to your dam, you should stay in the calmer waters. 3. The emergency nut stash. Never swim with all your nuts. Keep some in a hollow tree, cash, or emergency fund so you don't starve if the river gets too wild. Beaver. So let's recap what we learned by the river today. No risk is no growth. Staying in the pond means the inflation bugs eat your logs. High risk is potential high reward, but you might lose everything. Calculated risk is the goal. Use moose's patience and owl's wisdom. Diversify. Don't bet your whole dam on one tree. Beaver. Risk isn't something to be scared of. It's just a tool we use to build a bigger dam. You just have to make sure you're wearing your life jacket. If you want to learn how to plant your first tree and build a dam that lasts a lifetime, hit that subscribe button and join our forest community here at Beaver Invests. We're building wealth, one log at a time. Tell me in the comments, are you a squirrel, a moose, or a bear when it comes to risk? I'll see you in the next clearing. Bye.